We have another huge day for earnings, and this time will be one of the biggest competitor of your beloved company Tesla. So NIO. Alright, so if you are a holder of NIO, you might hate Tesla. Anyway, NIO is a cutting-edge electric vehicle company, and that has a kind of visionary automotive technology, and with every single time when the earnings passing when there is passing quarter, the earnings reports are becoming a thrilling narrative, not only in a EV sector, but also in a whole growing industry of stocks that have a enormous rise, and that's what we have seen throughout latest months. Sorry, I need to just turn off the voice as it's live, so we may pose questions online. So in the next few moments, we will delve deep into the financial pages of NIO's latest earnings report, but it's not yet out. Not out yet, so we'll at first decode the secrets behind their success. We'll go through fundamentals, we go through technicals, options, so what the market is betting on, and we'll uncover the strategies that drive that soaring stock prices. So in order to be really updated with the what company is doing, we need to go through many of factors. So I'm very glad you decided to pop in and participate in this thrilling and exhilarating journey through NIO's financial performance. So without any further ado, let's head on to what new earnings report would mean to NIO. So that's today's subject, and I'm just getting you through the earnings and forecasts. So what the market is betting on right now is this. There are calls and puts, and you may find right here the supposed volatility of a stock. So the volatility based on a 2 days expiry date is pointing to at around 10% of fluctuations. So the volatility is expected at around 10%, and as we are right now at the level of $10, we may get even up to 11 based on merely the expectations on earnings. But if it gets even better, it will get anyway. It will get skewed to the upside. So we'll strictly cover the topic of earnings a bit later, of course, as we'll talk over a bit about other aspects of it. So for now, earnings and forecasts. So let's have a look at where we were back in the 2021. So we were meeting expectations year by year, but 2022 was the one year when we had great headwinds for the economy, and that's where the interest rates hikes have literally came in hefty, and on 2023 we started to rebound. For now, I don't have the update quarterly, but it's a yearly one, so that's just an estimations, and it literally at first quarter of 2023 we didn't met the expectations, but eventually on March, so the earnings for second quarter was much better. That's why we had this outstanding results, and valuation has skyrocketed for the stock. In terms of earnings, by large, we also have disappointed on 2022, but 2023 looks like we should get this rebound effect, and also after this slack period will eventually outstand. So that's what fundamentals of this company. So NIO's market value market value, finding out that the revenue is upgrading every quarter since second quarter of 2022. So we had this stagnation. Sorry if it's just flickering. Is it? Or is it fine? All right, I hope it's fine. Let me know in a chat whether it's everything okay. So we had this. We know that the economy in 2022 has stumbled. We have this COVID policy been really rolled over around the world. But with this relaxation in 2023, we also can find that EV, not only the NIO, but also its peers, has had a kind of a more thriving, more robust type of a data coming out of revenue, and also in terms of net income, even though it was a negative, right now we are diminishing this negative tendency. So NIO is probably striving for the better times. So for now, NIO has a market worth of over 15.4 billion and price to sales ratio significantly lower than its EV peers at about 2.1. So despite those high uncertainties regarding where this net income may eventually get through, there are some hopes that we'll eventually rebound this tendency, and following this brutal sell-off in 2022, the risk-seeking investors might consider building a position in NIO for now. Why do I say the risk-seeking investors? Because it's still company with not very solid cash flow, and we'll get to this in a sec. So fundamentals right now showing also that shares outstanding by 2020 were rising. Right now, the positive tendency showing that we are at the threshold of 1,600 millions. So it means that for now there is no dilution of ownership. So when a company issues additional shares, it's a in most cases for investors it's a negative phenomenon. It effectively dilutes the ownership stake of existing shareholders, and this it's not observed in a NIO, aside of what happens to Tesla, that little by little is increasing the shares outstanding. So that's positive for cash and debt. So normally I would say that for the growing stocks, it's absolutely okay. So cash and debt in millions. The most important thing is that the cash is overtaking the debt level. So it means the company still have a return and have enough cash flow to thrive. So we are right now jumping to next element, that's a comparison of NIO in relation to the competition. So the main competitors are, yes, of course, there is Tesla, but I would say that Tesla has literally run away its peers to that extent that I would rather stick to a comparison between Li Auto and NIO and XPeng. So on NIO, at first, monthly EV deliveries has corrected. That's why we had this positive outlook, and the valuation of the stock has risen. But deliveries are still lagging behind the Tesla one. Anyway, we are still on the way, especially with this latest tendency. NIO has improved its weekly insurance trend in 2023, and right now it's bearing a chance of even getting to the level of where the Li Auto is. So it's absolutely enormous type of a rebound. And what we observed that during this latest weeks, this tendency is improving. So if we just have a look at the valuation on the stock, there you have Tesla on orange. The bright blue is the XPEV. So with that being said, that we have improved the insurance car registration. We can find it that should really have its reflection. It should find a reflection in price, and we'll talk about technicals in a moment. But for now, we can find that as long as the Tesla is a benchmark, it will be, I would say, for other EV companies. It will be for now. So it's a what I mean. It's a phenomenon of being the first. So this symptom and the one that's a leader that's really having its priority and playing the first fiddle when it comes to being interested in a EV boom. So Tesla is the benchmark. That's why when the customer is really interested in the EV sector of cars, it usually goes at first to Tesla. But if any other company will overtake Tesla in the deliveries and in the volume of cars, it would eventually shift the investors' engagement into the company, so they will strictly be moved to another company. So if the NIO company will overtake the Tesla, it will eventually lead to a even bigger snowball effect, and will really develop even faster. But for now, as we have just 1/20 of deliveries of Tesla, that's still hard to say that will eventually happen. So for that being said, we are right now jumping to technicals, but we'll find out whether the financials are yet up and ready in order to get you the most updated news. So NIO, yes, we have the ongoing data. EPS missed by 10.7%, so it's a surprise by 10.7%. So it should eventually lead to a kind of a lowering valuation at first on the market. So when it comes to the financials, let me refresh the data. So quarterly results are not yet published for NIO, but with that being said, revenue is at surprise of -5%, and surprise of EPS also may weigh on the further trajectory of the growth of the company. But we'll get back to this in a second. Okay. So that's the latest data. So let me know in the chat what you think about it, as it's something that right now may weigh on the stock valuation. But let me know to what extent and to what price the stock will eventually open. So we are getting back to our presentation in order to study the technicals right here. So let me just jump All right, so let me just find the right window. I just have missed one of them. But for now, yes, all right. So we are up and ready and getting back to our transmission. So with that being said, on technicals, I will maybe just switch you to a trading view. I will right now turn off the window of other companies. So for that being said, NIO may open lower, and the pre-market right now is assessing that we will broke this level of support and find the support somewhere around 10.24. So for now, something that was positive for the NIO was that we've held this trend line on weekly. So that was trend line. What I meant was this one, and this trend line was held throughout about few sessions. But right now, as we have worse than expected earnings, we are more likely to drop from here. However, you cannot really get one-to-one the expectations on the price and the expectations to earnings in relation to where the money flow on the stock market. Whether sometimes when the earnings are worse than expectations, stock may tend to rise if the majority of the herd was betting against the forecasts. So for now, the more likely is that we'll go down from here, but still we are holding this trend line, and as long as we hold this trend line, we may find a possible ride upwards, especially with this that RSI has reset itself and dropped down to 40 units after this gigantic slide downwards. So for now, NIO may break this floor down, but it may be just a fake out that after it will dip down. We may have a strict and very impulsive kind of buying power that may push the valuation higher. So I will just steer clear from trading NIO right now, but at the end of a upcoming session on the US market, it will be many more things to tell about the stock market. So if it dip down and will find a buying power, I will supposedly think of buying it as well. So we are getting back to our presentation to where large are buying. So if we just have a look at the third week of a month, that's where the most significant market options trading by institutions take place. We may just find that there are bigger open interest on calls at $12, whereas in terms of the puts, it's right at the $10. So it means that right now the expectation of the market is skewed to the upside. So normally when the sentiment gets down from the greed area to neutral, as it was back in the first half of a month, it would result with a I would say rather a negative omen than the positive one. So even though the trading volume may take place within this area of 12 to 10, it's still the expectations of the market are skewed to the upside, and that's why I would rather steer clear from trading it, the stock right now. So the underlying asset, what I mean talking about NIO right now, is, in my opinion, rather having a bit more difficult price action due to that hard behavior. So that's what the options tell us, and right now we are jumping to macroeconomy. Yes, I do know that macroeconomy is weighing on the stocks in a longer horizon, but this time and every time we try to find a context in which we are just finding ourselves at. So economy may spoil the party, but right now with that 2-year note auction draws highest yield since 2006, and claims by states rise similar to prior recessions. Even though the Fed is talking about no recession at all, and that the soft landing is their base case, it's absolutely something we cannot neglect. So there are weeks around beginning of recession, and if taking in this consideration, this exaggeration seriously, it will take us about a couple of weeks in order to get to a recession. Will it get similar this time? It may get through. Very, very rarely the history and the situation on the market are really repeating, rather they are rhyming themselves. But remember that the recessions tend to occur suddenly, often when the surface economic conditions appear to be stable, and at the leading indicators, we are finding the recession is imminent, whereas the lagging finding that superficially, at least superficially, everything is in its place. So while there is a talk of a soft landing, there are several reliable indicators that continue to align with the possibility of upcoming recession, and that's what we cannot really skip. So final thoughts. So if we just look through once again, it's NIO data of earnings report. Can we get this report on the website? Quarterly results are not yet over, so I will get back to them maybe in a later time. If you just want it, let me know in the comments. So on earnings report, taking that data and just looking superficially at them, the earnings per share has dropped. So it's another month, another quarter of missed earnings expectations. So for now, as we have risen over 100% from the bottom and 50% from here, the market was in a limbo and expected that if we just manage to get with these earnings higher when the expectations, so when we'll live up to expectations, we'll eventually have a chance to rise and form another higher highs. But before it happens, it will probably for NIO take more time. So in order to invest in anything, you need to just look at trends. If there is a structure of high highs, high lows, it usually there is a higher chance that this trend will continue. But if it's just a mere upthrust, it's just too late to consider this as a stable investment. So for now, if we just have a look at where the NIO may stop from here, it's right around $9, and we'll find out what will happen right after. So that's where the volume profile sits. The biggest, however, one sits at 7.79. So that may eventually that's where the company may eventually lead us to. So NIO, we do know that it's diversifying its offerings beyond electric vehicles, expanding into the power segment. The battery exchange service allows customers to also get better results by using its technology. But as we do know, even though this diversification wasn't enough in order to boost the earnings of the company, and NIO may still lag behind its competitors. So if the company, however, will achieve the capability to product in a growing manner, it could be a worthwhile long-term investment. However, for now, this rising interest rates, trading tensions with China, and the listing threats regarding US-listed Chinese stocks, that all exacerbates that sell-off may happen. So for now, I'm steering clear of it. But if you are investing, let me know what's your trading or investing strategy for the time being. So for now, that's it. Thank you very much for watching, and see you at tomorrow's next dose of news.